What has done extremely well for itself is Mahindra and Mahindra Financial Services. That one is up close to 12% in trade. We talk about financials, we talk about results impact coming in, 11% for that stock, doing extremely well for itself. Mind you, good numbers, PAT above estimates, strong NII growth, strong other income. And while NII is in line with estimates, the PAT well and truly above estimates. We estimated 280 crores. The PAT has come in at 333 crores. So they have come in very well. Let's get in the management of NMM Financial. Ramesh Iyer, MD of the company, joins us right now to speak about the numbers. Good having you, Ramesh. Thanks much for joining in. Take us through your performance this quarter. What has led to the strong growth in the NII?
Yeah, one is, of course, we become clearly a multi-product company in the sense that, earlier we were kind of focusing on just new vehicles as one of our growth drivers. But over the last about 18 months or so, we also started focusing on second-hand vehicles. And that definitely comes with a much higher margin, and therefore that's one of the reasons why the net interest margin growth is visible. Second is, with addition of about 57 odd branches, I think the overall productivity of all our branches are also much higher than before. So for the reduced cost, if you're able to produce more, that helps, growing the volume, and therefore the net interest margin further goes up there. So therefore I would think two clear things: multi-product approach and more branches, therefore acquiring more assets in the rural geography are the two clear reasons. And of course a very small percentage of interest correction which happened during this quarter. Not significant, but definitely a trend of reduction, about 0.1% reduction to the interest. All three put together has actually improved the net interest margins.
And how has net interest margins performed on a sequential basis? Is the expansion margin sustainable?
See, clearly if you look at any NBFC balance sheet, one is of course what's the growth and what's the borrowing cost, which leaves you the net interest margin. That's one driver, which I just explained that we've done well in terms of our overall growth on a multi-product approach is concerned, followed with an efficient borrowing program with multi-product borrowing is concerned, which is left with a good net interest margin. The other two elements of the clear margin growth are coming from the transaction cost, and second comes from the asset quality. On the transaction front, you would see that our overheads have actually come down over the previous year on the asset base, which means we are producing more across the country from the set of branches. So the overheads have actually come down. The third element, as explained, the NPA, right? If you look at our last March, we were 3% gross NPA. It had picked up, and when you looked at last quarter number, which is the third quarter, we were at 4.1%. That's come back to 3%, which means the collection efficiencies have been good. And even if we have been able to, wherever necessary to repossess vehicle, we have been able to sell them at the second-hand market efficiently. Our overall collection efficiency has been good, which means the rural cash flows have held up pretty well for us, and which is what has contributed to the ultimate growth in margin. And I very strongly think that the rural market continues to offer this opportunity of good cash flow, and therefore we don't see any pressure on our margins, and we only expect going from here that if the interest rates were to come down, as all of us are expecting, since our asset side is a fixed rate lending, one would definitely see protection of margin clearly possible.
You have mentioned that the cost of funds are likely to come down due to the lowering of interest rates, and that will result in better NIMs. Could you quantify what's the kind of net interest margins that we may see as an average in FY14?
A difficult number to put, but we are expecting that in this year the borrowing cost can come down anywhere from 25 to 50 basis point. And if you look at our numbers, we have, having an uncovered borrowing cost yet not passed on to customer from the past of about 0.6%. So I would think that we would like to retain, if this 0.5% interest rate had to come down, one would expect that we will retain that. And that could be an addition to the net interest margin.
Gross NPAs, they have come down sharply to 3%. What has led to the improvement, and is the trend likely to continue? Your outlook for the same for FY14?
See, clearly look at NPA is an outcome of two or three things. One, what is your loan to asset value? If you have lent 70% loan to asset value, I think the customer interest on the asset is very, very high. And therefore, if somebody fails, it's more circumstantial failure rather than an intentional failure. So we have held on to our loan to asset value pretty well, and it's at about 70% now. Second is, what's the resellability of the repossessed vehicles, if any, in the second-hand market? And we have found that the demand for second-hand vehicle or tractors in the rural market is pretty high. So we have not been really required to hold on to repossessed stock. that is helping us further. Three is, I've always said this, that the second half for the rural is always a much better, much buoyant half as compared to the first half, mainly at the back of festival, marriage, harvest, right? And therefore it's not an across the country phenomena. Some of the markets are not doing well because of the drought situation or power situation, but on an overall basis, the second half has performed extremely well, and that's been the history. If you kind of look at even the previous year, you will see in the last quarter, the NPAs do come down, and that's exactly what has happened even in this quarter. That 4.1% gross NPA, which was December end number, has now come down to 3% as of March as we speak. So, and going forward, I think this trend will continue, and that's the reason strategically we are opening another 40-50 branches during this year, and we'll go more deeper. So ultimately, being close to the customer is the success story to the whole program.
The AUM growth has been at 35%. How has the disbursement growth been? And do give us some color on the segmental breakup as well.
See, if you look at asset under management, is grown at about 35% over the previous year, and we now manage close to about 28,000 crore asset. And the broad breakup would be about 30% will be the UV segment, 18-20% would be tractors, 30-32% would be cars. About 7 to 8% is coming from LCVs, commercial vehicle, construction equipment, etc. And another 8-10% comes from second-hand vehicle. That's a broader base. And in terms of the overall disbursement, was one more question. We've grown at about 22% in terms of our disbursement over the previous year is concerned. And that would have come like, our matured products in the balance sheet, I would think are the Mahindra range of vehicles, tractors, and the Maruti segment, which is a very matured business in our balance sheet. That would have grown at about 15% or so, but added with many more cars that get sold in that market, and as I explained, second-hand vehicle, construction equipment, LCV altogether, therefore the overall growth has been about 22%.
Given the current slowdown, how do you see FY14 shaping up in terms of disbursement and AUM growth? Which segments will you be focusing on?
I think strategically we will not want to shift from our overall focus into automobile, tractor, including second-hand vehicle, and to a smaller extent in the construction equipment segment. Therefore, the broader strategy will continue to be focusing here. But I think for the growth strategy, we will go more deeper, as I said, and therefore we are planning to open another 50-60 branches during the year and more deeper. The third would be, we have a cumulative customer base of about 2.5 million customer, and they are all sitting in about 170,000 villages of the country. And through our direct marketing initiative, we actually will reach out to these customers, and through them we are trying to generate more business in each of those villages. Currently about 15-20% of our business comes by our direct initiative, and we very strongly believe that that initiative will help us maintain this kind of a growth that we're talking.
How has securitization panned out during the quarter? There has been an improvement, and what's the trend forward?
See, clearly the first 9 months we did not do any securitization because the new rules were being set up and all those kind of stuff. In the last quarter we have done about 1400 crores of securitization, and we always had this strategy that about 10% of our balance sheet, 10 to 12% of the balance sheet is what we securitize. And with this new rule now setting in, and we have already tested our transaction in the last quarter, I think going ahead we will have this 10-12% of the balance sheet getting securitized.
How have the return ratios been for FY13? What is the outlook going forward there?
See, if you look at our capital adequacy, we are close to about 19-20, which means, we are geared ourselves only about 4 times, right? And we have a return on asset upward of 4%. So I think our overall return on net worth has been close to 20-22% plus. If we gear ourselves better, which is capital adequacy requirement maintenance is only 15, we are at 19. So we expect that we will gear ourselves better going up to 5.5 times. And if this kind of a return, which is currently being maintained in terms of return on asset is concerned, which is nothing but an outcome of net interest margin being maintained and asset quality and overheads being under control, which is what I just explained. And if these 3 things happen well, earning this kind of a return on asset and gearing ourselves 5.5 times, I think the return that we are currently offering is not a huge challenge.
We have a stake sale in Mahindra Insurance Brokers. How much been the profits on that account, and what's the outlook going ahead?
See, first is the MIBL outlook. It's a very, very closely strategized synergy business with Mahindra Finance and Rural Housing. They provide the insurance for customers in rural market for both life and general insurance, and therefore their growth is directly linked to the growth of these 2 businesses. And they've also given a good return. They had a profit before tax of about 51 crores, ending with about 34-35 crores of PAT. right? But they are not strictly comparable to previous year because the previous year numbers were, due to regulatory change, pretty low. But even then, simply looking at on a standalone, about 35 crores of PAT is a substantially large contribution. As far as the stake sale is concerned, the transaction was fully completed and we had about 66 crores of profits arising out of sale of investment. But we have also taken another exceptional item. We have prudently provide for standard asset another about 36 crores. So the net impact on exceptional item, if you look at our P&L, is about 28 crores.
Finally, what's been the progress, the business plans for the new banking license?
After the guidelines were announced, we've gone through the details and we have provided our list of queries to Reserve Bank as was required. And we are waiting for some response to the queries that all of us have submitted. And internally, yes, as a Mahindra group, we have been always saying it's a very exciting opportunity and we are looking at this opportunity very closely.
I'll leave it at that, Ramesh. Thanks so much for joining in today. Excuse me, and giving us that perspective. Just a couple of updates, really. A good set of numbers. Brokerages have come out with decent enough upgrades as well. Credit Suisse has upgraded to neutral from underweight with a target price of 200. But Nomura has maintained a buy with a target price of 250 on M&M Finance. And HSBC has upgraded to overweight from neutral with a target price of 250 again. The stock up close to 10.5% in trade. Our technical experts are with us.